If you're always analysing deals and wondering what the profitability is of a serviced accommodation, HMO, or a BRR option should be, then watch this video and find out exactly what it is in my business and how I created a seven-figure property portfolio. How much cash flow should your properties produce? Now, before we get into the nitty-gritty of the video, I just want to clarify the difference between a rental strategy and an owned strategy. Obviously, an owned property, the mortgage is going to be a lot less than a rental that you will pay. So for the sake of this video, I'm going to talk about the profit levels on a rental strategy. But if you own the properties and run the same strategies, serviced accommodation, HMOs, etc., then naturally you're going to earn a bit more money than the figures that we're going to talk about. So we'll start with serviced accommodation, something that I'm very passionate about and something that I have a lot of in my portfolio. And, I love serviced accommodation because there's so many moving parts to it. I like building out systems, processes, and automating things. So for me, I really enjoy getting into the nitty-gritty of the serviced accommodation. Also, with serviced accommodation, you have more of the market to aim for. For example, a HMO doesn't work on anything less than a 4-bed house, really. Whereas with serviced accommodation, it works anywhere up from a studio flat up to, 10-bed houses, 20-bed houses. It doesn't matter. But with HMOs, you've only got 4, 5, and 6-bed houses. Now, the majority of the UK, if you just think about your street or, your surrounding villages, locations, most houses are 2 and 3 beds. So you've got more stock to acquire. Now, with serviced accommodation, you can charge per person per night, or you can just charge for the property as a whole. That's my preferred strategy. But as we go for the contractors, they typically work on about £35 to £40 per person per night. So you can work out your average nightly rate based on that. Although with scale and economies of scale, they'll want discounts. So if there's 6 people in there, they're not necessarily just going to pay £35, £40 per person. They'll want a bit of a discount. But ultimately, the nightly rate is still powerful and it still makes some good money. Naturally, a 1-bed flat can only fit 2 people in, possibly 4 with a sofa bed. So you're not going to be able to build that out as much as you could build out a 6-bed house that might sleep 10 or 12. So your profit margins are going to differ. However, a 1-bed should rent for a lot cheaper than a 6-bed. So you've got to factor all these things in. Your utilities will be less on a 1-bed or a studio than it will be a 6-bed. But for me, with serviced accommodation, I think you can make anywhere from £250 a month up to north of about £1,000 to £1,250 for a rental property. And I think if you're achieving that, you're doing very well. Now, with serviced accommodation, you have your fluctuating seasons. Depending on whether you're in a tourism area, such as the lakes or the Cotswolds, you're going to see huge influxes around the holiday seasons, around school holidays, Christmas time. But you might not see much throughout the rest of the year because there aren't that many contractors traveling to your areas. Flip that to a city location, a busy city, and that's developing a lot of things. Newcastle is my preferred city. We have a lot of projects going on right now. There's a lot planned for the next 3 to 5 years. So we have a lot of contractors visiting. Now, we get the best of both worlds pre-COVID, and hopefully once COVID's really settled down, in that we also get the tourism coming on a weekend, stag and hen parties, people traveling to see families, etc. So those are the types of cities that, you really want to be trying to get into because you get the best of both worlds. However, your income will still fluctuate because, schools, holidays, July, August, September are great, but then the kids go back to school and it dips off a bit. Contractors still travel. We are shooting this in December right now, and we're about to head into Christmas week. Now, Christmas week's great, but also the contractors finish this Friday. So that traffic dies off and the tourist traffic comes in. Now, the ideal scenario is you get both traffics in at both time, and then obviously you can boost your rates. So serviced accommodation, $250 to $1,250 should be about your profit margin. And I know that's quite a scale, but depending on the size of the house, I typically find that the bigger houses are pulling in the better money at the minute. So they are north, 4 figures, your 1250s, your 1500 quids. And, we have long-term contracts in there. Also, the littler properties, whilst they're cheaper rents and you can't charge as much, they tend to have a bit more turn on them. So, the bigger properties tend to be booked out for longer periods of time, whereas the littler ones, maybe 2-night bookings, 3-night bookings, and then they turn quite quickly. They are just a stopgap for someone maybe visiting the area or just quickly needing something. The contractors that travel, they tend to travel in bigger squads. So, that's why they take the bigger houses and they take them for longer, which means less cleaning, less linen, and ultimately your profit margin increases. Having said that, 1 and 2 bed properties, they can make a tidy £400-500 profit a month, an extra £6,000 a year. And let's be honest, how many £6,000 a year do you want in your business to move your business forward? I would take that all day long from every single 1 or 2 bed property that I've got. Whilst I've still got your attention, if you're enjoying this video content, then there's plenty more where it came from. Don't forget to hit the bell notification and subscribe to the channel. And there's links in the description which give you other videos exactly like this one to help you on your property journey. The next strategy is HMOs. So for HMOs, you have typically 4, 5 and 6 bed houses. And what you would do is you'd rent them from a landlord, and then you're going to charge per room a monthly rate. It's a standard AST contract. So you have a tenant, you manage it no different to a single let, and you typically would look to make anywhere from £750 to about £1,500 profit from a HMO operation. Now, you might be thinking, well, I'll just go into HMOs. That's all well and good, and that's a great idea and a great strategy. However, as I touched base on earlier in the video, the stock is a lot less. So there's not that many 5 and 6 bed houses out there. There's not that many available. So you're going to find it harder to acquire as many deals on a HMO strategy as you would on a serviced accommodation rent-to-rent strategy. So figure out what you want to do. In my eyes, I think you should have a balance. I think you should have a portfolio full of both. You can probably acquire 3 SA units for the same amount of time that you'll acquire 1 HMO unit. But naturally it will blend well, and it's good to have diversification. I know when COVID hit, if I just had a serviced accommodation portfolio, I would have been terrified. I really would have been, worried. I thought we would take 0 revenue in April this year. We actually didn't. Things actually didn't pan out how I thought. But when in the midst of the pandemic, the week before we locked down, I think all serviced accommodation operators were quite worried. And if I just had a portfolio of serviced accommodation units, I would have been even more worried. But luckily, I had the diversification of the HMO and the single lets, which brought that extra revenue in that we lost from the SAs. That was the steady revenue, and that's the benefit of HMOs and tenants. Single lets can't really be done on a rent-to-rent strategy. It just doesn't work. So single lets are predominantly just for your owned assets, your buy, refurb, refinance type properties, your properties that don't really work well for serviced accommodation or HMOs. But single lets done right with the right tenant profile are very steady income. Yes, you're going to get a bad tenant every now and then. Yes, you're going to get a messy property you've got to refurb that might eat a bit of profit. But working on the Pareto law of 80-20, 80% of your tenants are going to be pretty good. They're going to pay their rent all the time, and you're going to make some steady income from it. Now, single lets, you're probably looking at anywhere from £200 to £400 a month net revenue. You'll be struggling to push further than that. Even in the high ROI areas like the northwest or the northeast, you're still going to struggle to get north of £400 net profit per month from a single let. So £200 to £400 profit on those, and as I said earlier, they can't really be done on a rent-to-rent strategy. If you get into a bad rent or you pay too much for the rent, then those profit margins are going to come down. But knowing roughly what the profit margins are, you should be able to now analyze your deal and make sure that the rent you're paying is right for your business, not what the landlord's asking for. That's the negotiation part that you need to get into. You've got to make sure that the rent works for you. Make sure it works for you as a profit venture, and then if it does, then you can negotiate with the landlord and you can make it a win-win situation for both. Ultimately, you can't take a property on just because he wants a certain amount of rent if it's not going to work for you. Now, I produced my own deal analyzer. I'm a bit of a spreadsheet geek behind closed doors. I like formulas, and I put it all together. It is available. If you would like a copy, just comment below deal analyzer and I'll make sure you get one. Look after your money, look after your profit margin, and you'll have a successful property business. Thanks for watching this video. There's plenty more awesome content where this came from. As I said, don't forget to subscribe to the channel and continue watching the videos. And if you really want to get ahead of the game, then join my private Facebook group. Just head over to Facebook, 7 Figure Property Empire. Click the link to join and we'll get you on the inside.